For more on finance, we're joined by Rod North, the Executive Director at Bourse Communications. And Rod, good to see you as always.
Good morning.
Really quite a hit yesterday with some very mixed data locally and then, of course, overseas, hitting the dollar particularly.
Yes, and I think we also have to factor in that the share market's risen about 8% for the calendar year to date. So when you get a bit of bad news coming out or mixed local data, and of course there was a bit of concern over some issues sort of coming out of China as well, because obviously there's going to be a changing in the guard there, and I think Australia is looking very closely at what effects that might have, because China's such a very large trading partner of ours and also the second largest economy in the world. So our market took a bit of a pullback yesterday by about 1.4%, which is quite a drop. But I think the thing that we've got to remember is, and there's an old stock market adage, that the share market rises by the stairs and falls by the lift well. And if we go back to sort of 2007, 2008, 09, the market dropped quite a lot then, but we're on the way back up based on some pretty good profit results that came out over the reporting season over the last couple of weeks. But the big focus for this week is on the domestic data, and we've got some pretty key data out, today with balance of trade and also retail sales. And of course, we'll be looking very closely at what the Reserve Bank may or may not do today as well, of course. And
the wide expectation is no movement at all from the RBA board.
I think that's pretty right. The thing about the Reserve Bank at the moment is, with a cash rate at 3%, we've seen it drop down from its all-time high in recent times back in November 2011 at 4.75%. So at 3%, I mean, there's still a bit of a margin if the Reserve Bank needs to do something at some point this year. And look, a lot of commentators and analysts are still predicting that there may be a cut at some point, but when you look at even the dollar, which has dropped a bit, it's now at an 8th-month low, and there was some speculation when we sort of looked at the minutes last time over some of the Reserve Bank board members talking about one of the biggest issues was trying to get that dollar down. I think there were two board members that were arguing we really need to lower the cash rate a bit more to get the dollar down. But the thing that I think sort of stands out to me is the most interesting thing. Even if the Reserve Bank does nothing today or nothing for some months, I think there's some building potential for the banks to actually decrease rates outside of the cycle now, because there's a lot of competition out there for mortgage funds, given the fact there's been quite an uptick in the property market, and we've been watching that sort of very closely over the last couple of weeks. And I think that we may get the surprise of the banks actually delivering and playing Father Christmas instead of the RBA at some point.
First, wouldn't it?
Very pleasant.
So watch out for that one.
Yeah, well, look, now we've also, I mean, we were talking about the housing market just then with Julie Katz. Building approvals were weaker again for the second month.
Yes, they dropped, and I think this is one of the other issues that the Reserve Bank will be looking at very closely, because that was quite a significant drop when there was an expectation it should have been a rise. And I think sort of equally the market will be looking to retail sales for the same thing. Now, you'd actually expect retail sales for January would have to be up with all the sales, but I mean, that figure is going to be a one to watch as well. So we're getting a lot of mixed data at the moment, which is again why in some ways it's good for the Reserve Bank to keep its powder dry and have that cash rate at 3% with room to move, either up or down depending on how it needs to calibrate the economy over the next 12 months.
Good to see you, Rod.
Thank you.
Thanks. Now, coming up, the corruption inquiry into mining licences resumes in Sydney.